The last 7 days for the markets has centred around central bank comments and forecasts, rather than any new insightful economic data, with the possible exception of the US jobs figures out last Friday, which for the second successive month were pretty healthy, and have a US rate hike almost a done deal for December. Locally, other than some reasonable consumer confidence data, it was all about the RBA, with their statement on monetary policy last Friday, and then the last official speech from Reserve Bank Governor Glenn Stevens, where he reflected on his 10 years at the helm. The statement is always a smorgasbord of economic data and charts, but perhaps the key graph is the GDP growth forecast, which you can see shows the RBA expecting a dip in growth going into 2017, but then slowly recovering to a reasonable degree of confidence. The rationale for this recovery is fairly high level in nature, but centres on reasonable growth from our major trading partners and the ongoing benefits of low interest rates and a relatively low Aussie dollar. Having said that, you can see the impact of the latest rate cut is in contrast to previous cuts, which leads us to Glenn Stevens' farewell speech, where he talked at length about the diminishing capacity of monetary policy alone to deliver on growth and to manage the economic cycle, especially in this low growth but high household debt environment. One of the points that he made very well was that now may be an ideal time for government debt to rise to fund infrastructure investment and long-term assets that yield an economic return, but not increasing debt for day-to-day government spending, nor driving increases in household debt. So while the yield curve is still implying even lower rates, which is difficult to argue with given our rates are still high compared to most major economies, the effectiveness of further rate cuts is being queried by many, and indeed by our Reserve Bank, who continue to correctly put the onus on federal and state governments to deliver on fiscal reform and infrastructure investment. And finally, in an answer to a question about business investment, Glenn Stevens noted that while low interest rates help, broader incentives are needed to drive investment. But nevertheless, he noted Australia remains well placed to cope with global volatility and the pressures it places on consumer and business demand. Until next week, that's the market update from Bendigo Bank.